Hello everyone in this fine December and late 2022. Now, in this week's review, let's see what happened in previous week and is there something we could expect from next week. So, here's the thing, I would say absolutely nothing interesting at all happened previous week rather than next week, because we still have to live through next week to see what will happen there. But as I told you, this was pretty quiet week with one exception, and that's oil market. Oil market continued its previous trend downwards, and despite everything, despite so-called Russian sanctions which started at the early December, oil continued to rise, and I kind of like it. I like it how markets had priced that oil sanctions in place, and this is classical buy the rumor, sell the fact event, where actually people anticipated long before something that certain event will happen, and when it happened they cashed it out. So as I'm always saying, you have to always look at price and price reaction, because news without further context doesn't say a thing. And actually, if we look at this is West Texas Intermediate. If you're looking at West Texas Intermediate, it still has fallen rather sharply since last week, which was what, 5th of December, yes. So it is at the levels which we saw at early 21. This is pretty staggering. Now this is levels of early 21, and close to levels which were just before COVID. So if someone has woken up from deep sleep, he wouldn't know that just a couple of months ago, like 6 months ago, we were witnessing pretty substantial energy crisis. But from here you cannot say that nothing had happened, and that's interesting. But still, this is not discussion about oil markets. This is just example that markets do move in the ways which most wouldn't expect, and that's where the trends are. And with that said, let's look at the euro against dollar and see whether there's something interesting happened. Of course not. As I told you previously, there is nothing interesting at all, and we are at the same levels we were roughly a week before. And let's see markets which are prone with people who had quite weird perceptions about how financial system operates, and Bitcoin. And here we will see the same old pattern. Markets are the same. They are at the same levels for months. This was the previous range from summer, and now we are here since beginning of last month due to the FTX crash, and we haven't moved since. There is no volume, no movement, no volatility at all. And if I were someone who is proclaiming that crypto will change financial world as we mean it, this will be the worst looking pattern I could imagine. Because what do you need? You need hype and you need movement to either direction. You make some case if something is falling, and you can make some case if something is rising. But if something stays flat, none of your predictions and your gossips about something important won't happen. So you cannot say nothing. But for true traders, it doesn't care, because good traders trade all markets and diversify their risks and follow the trends. So I practically don't care what one market is doing, because probabilities will still even out. And with that said, let's look what next week will bring us. And fortunately or unfortunately, but next week will bring us United States CPI data. Let's see if they will be aligned with forecasts or not, and central bank statements from Federal Reserve, Australia we have unemployment change, but from Swiss central bank we will have policy rate, although not many people actually follow Swiss franc from Great Britain with Royal Bank of England. We see whether they will hike their funds rate, and ECB press conference as well. So I'm not particularly interested in those manufacturing statements, although if they will show some serious crash, that might be interesting in Europe. But otherwise, let's see whether the federal funds rate, Swiss policy rate, and official bank rate in Britain will be risen according to forecasts, and maybe what will be the pace of future increases, because 4.5% for Fed, that's pretty decent. I would say this is in line with some historical patterns, and I would be, as someone who is not either in bracket that we have to hike something or we have to live in zero interest rates policies, I would say this is something like closer to history and closer to reality, that we have funds rate of 4.5%. And those who are crying that world will end, well, you simply don't have to invest in VC funds, which relies on almost costless funding, and real estate, which is surely fueled by quantitative easing and zero interest rate policies. But let's see. Don't want to make any harsh judgments, because harsh judgments makes us biased. And with that said, let's see whether these patterns will change. But for now, I see if you are trading, you have excuse me for this nonsense, you will have pretty standard trends in several markets, and those trends will continue, because if someone would say that November that you should short oil just before Russian sanctions came into force, no one believed you, right? But here they are. If you simply went to trend and shorted, you will make already decent money, going opposed to conventional wisdom and perceived forecasts of financial world. That's trading is all about. Riding with trends and cutting your losses and managing your risks and ignoring most of the fundamental news. So let's see what will happen. Let's stay tuned and wait for next events. Stay tuned. Follow me. Bye.